Investing in ETFs will not make you a millionaire, although it is something we hear a lot. Hello everyone, welcome back to the channel. I'm sorry to say that investing in ETFs, although it might not seem like it, will not make you rich. We always hear or listen someone that the best way to invest, the easiest, the safest, and the one that will help us be a millionaire is by constantly investing in ETFs, a certain amount of money constantly to achieve it. We all know that active investors who decide to invest in individual stocks, like me, and possibly you, are extremely prone to underperform the market. Even so, we see many fund managers or active funds administrators trying to beat the market just like many of us. Their sole purpose as a company is to outperform the market for their investors. The only reason why they exist and do what they do is to offer investors a better return than the market. But do they really do it? Do they really achieve it? There are several studies showing the return of these active funds such as ARK Invest, for example, and other managers to outperform the market from time to time. As we can see here, in the middle of 2022, 51% of active funds failed to outperform the market, which means that 49% of the funds did. On average, 62% of the funds failed to overcome the market, which does not sound that bad because although they are not the majority, it means that 38% have managed to overcome it. But as you can see, the high volatility in this graph, it means that those who manage to overcome it are not always the same. What I mean is that the ones that are able to outperform the market this year are not the same ones that outperform the market the last 2 years or maybe next year. For example, as I mentioned ARK Invest, we can see that in 2020 they had a return of 148%, while the S&P 500 had a return of 16%. And yes, I understand that their biggest investment was or is still Tesla, and Tesla did extremely well in 2020 by going up almost 700%. But if we also compare it with 2019, they also managed to surpass the S&P 500 by a bit, since they had a return of 30% and the S&P 500 27%. And maybe it has been an excellent investment at that time, having the best return for those 2 years. But when we see things in the long term, the last 5 years, ARK Invest failed 8.40%, while the S&P 500 went up 57%. Both have fallen a lot, but still the S&P 500 continues to win, which is why studies shows that 95.22% of funds fail to beat the market in the last 20 years, which I guess Warren Buffett's Berkshire Hathaway has been one of those, but it shows how hard it is. Worse still, it can be seen that only 26% of large cap funds and 31% of all domestic funds manage to survive. That is why many mention that investing in an ETF like the S&P 500 is the best option when investing. And although we know that according to statistics and samples and studies, investing in individual stocks is not the best option, and that it is most likely that we will spend a long time studying, stressing out, analyzing stocks, we will still not be able to beat the market. We still decide to do it because we all believe, or we want to believe, that we want to be the next Warren Buffett, and why not feel satisfied with a return of 9 to 10% when you see companies like Tesla with a return of 700% in 1 year, or Apple, which is an excellent company with a return of almost 80% in a year, while the S&P 500 went up 16% in 2020, which, don't get me wrong, is an excellent return in 1 year. But when you see the other stocks that I just mentioned, you feel a little bit behind, or that you're losing your time. Even more so now that many investors have just started investing recently. I started investing in 2017, for example, but according to Robinhood, which is one of the platforms, or my main platform that I use, the pandemic caused millions of people to start investing in the market since 2020. The problem is that most of them started investing at the best time in 2020 and almost all of 2021, when the market was doing excellent and with crazy returns were seen as I just showed you. Then when the market like last year in 2022, those people who started in 2020 were making a lot of money. It was easy for them and they would think that it was always like that. Now it is most likely that they are almost where they were when they started or losing a little bit of money. And this is where the desperation and stress begins for wanting to sell and saying that this stock market thing is useless and they will not waste their time with it. I say this from poor experience because I also went through that. But also what happened last year made us realize that following stupidly high returns like those in 2020 usually ends very, very bad because it is easy to see a good return when the stock market is going up. Still, many of us hear that what will make us more money is to invest in an ETF like the S&P 500 and that it is best decision ever. The problem is that investing in an ETF will not make you rich because the example that I always show by investing $100 per month with a return of approximately 13%, you will have $160,000 in 20 years, which is not a lot of money. But if you invest $500 instead of $100, you will have more than $500,000, which is still not rich for many people, but it is quite a lot of money. Now, if you want to reach $2 million in 20 years, you would have to invest $1,900 per month constantly with a return of approximately 13% for 20 years. Still, taking into account that $2 million is not the same as $2 million in 20 years, thanks to inflation that used to be between 2 to 3% per year, and less now with a high inflation that most likely will last until 2024. And what this teaches us is that the more money you invest, the more money you will have in the future, which may sound a bit obvious, but sometimes we don't see it that way until we really start investing or analyzing these kind of things. Investing in an ETF is not magic, and even more important is to understand that investing is not the same as earning or making money. I have said it many times. Seeing investments as a form of income when you are starting out is not the best way to see it, since that is what will cause you to the most anxiety and despair. And when you come across a year like 2022, your investment income was most likely zero. You will definitely think that investing is a scam and that it is not worth it. Now, what I want to get with this video is to show that unfortunately the only way to get rich is learning how to earn more money, and that investing is not a way to earn money as an income. Investing is what we should do with the money you earned already with your work or your job, business, or whatever, in order to have a return that exceeds inflation and gives us a little growth. I read a tweet showing a little more about how investing protects us from inflation. $25,000 in 1992 was equivalent to $54,000 in 2022. $25,000 saved up in 1992 is $25,000 today, with a purchasing power of 53% less than in 1992. $25,000 invested in 1992 would be $190,000. The problem here is that learning to earn money is quite difficult. It requires a lot of work, perseverance, patience, and sacrifices. There are some videos in which I talk about why investing as such will not make us rich either, and some told me that Warren Buffett did it that way. But the truth is that Warren Buffett didn't get rich thanks to stocks or the stock market and his investment of $1,000 a month in it. He created a company, Berkshire Hathaway, which with it he was able to use investors' money to invest aggressively in stocks and many different businesses, which was what made him rich. He is an excellent investor, don't get me wrong, but he got rich by making money using his investment skills to get good deals, not by investing in the market like you and me. Just like we see many millionaires today showing their portfolios with thousands or millions of dollars in it, and that money is not money that they have earned from their investments in the stock market or $100 per month. No, it is because they have looked for a way to earn more money to be able to invest more, and this is quite important. It is very important to understand the difference between making money and investing money. It is very easy to feel motivated when you start investing, but when time goes and you still have not achieved what you want, you start to feel quite bad and different. I say this from my experience. It is not easy to learn to earn money and not for everyone. I'm not saying that it is for me, but I'm trying. Learn a skill, make money first, then use that money to invest in companies in the stock market or ETF you have already researched, or an ETF to hold on to. But don't expect to get rich just by investing in an ETF without looking for ways to make more money on a daily basis.